So let's start by talking about the African funding landscape and a report released by Briter Bridges gave some kind of hope in the middle of all this chaos that is happening. Chimgo's dream, what do we have?
Okay, so I mean, it's kind of common knowledge that African startups raised less money than they did. Depending on who you're listening to, it could be anywhere from a 20% drop to a 40% drop. So basically, less money came in last year than 2022, but there's context, and that's kind of what Brighter Bridges does with the report. They tried to provide a context to that drop. So they started with a 10-year overview of the funding landscape. So from 2014 to 2022, what has happened in that period? So what you would see is that funding has consistently grown. I think 2014 startups probably raised in Africa, maybe about $500 million or something like that, which today, last year we had MNT Halan, M Copper do about 400. We had an acquisition last year of about 680 something $1 million. So basically, there's been a lot of growth. That's important to note. On the other hand, we've also seen that so 2019, 2020, 2021, those were insane years because of COVID and the pandemic. So basically, what happened during that period was um, everyone was inside. So the stock of tech companies rose.
Yeah.
Guys like Zoom, who were now more important to companies, they saw their stock rise. And naturally, investors were putting money behind those vehicles or behind those businesses. There was also there were also policy moves by certain governments. So governments were either giving out subsidies to their citizens or giving them cash injections or even reducing exchange rates. So near zero exchange rate, sorry, interest rates, please cut out exchange rate. So near zero interest rate means that startups were kind of favored. So why is this important to note? So investors, this one you're asking if 14% was made sense. So an investor in the public market may not always get 14%. In fact, only in very rare cases would they get 14%. So what happens is I want to invest my money and I'm looking. If I invest my money in the US, I'd probably get a 3% growth on that. But if I invested that money in a startup that could do 10x in very successful cases, we could see close to 100x returns on my money, right? And that means that investing in startups is a more attractive option.
Yeah.
But after the pandemic, everyone had money. So people were spending online, investors had money.
Yeah.
We now saw a situation where um, sort of the inflation rose as well, partially due to the Russia-Ukraine war. So with the rise of inflation, investors are trying to hedge their bets. We don't know what's going to happen and all. And it also caused a slump for venture capital because where they get their money from, they don't get their money from you, right? But they get their money from like pension funds. Those guys are now looking for safer bets. It's no longer about huge returns. Now it's about how do I protect my money and make sure my money doesn't
And
get
there were
get
also
missing.
other bad happenings in the financial space,
Yeah,
SVB,
I mean those were
SVB.
in a way connected to the lower money. So for example, SVB, the bank run was because startups needed money;
Yeah.
they couldn't raise anymore. So all those things in context shows that what happened last year was not exactly in a way it was probably exaggerated. That's something that the report tried to point out. It was probably exaggerated, and why do I say exaggerated?
Like it's not
Um,
that bad.
Yes. So if you put it in context, right? I think in 2019, startups raised about $2 billion, if I'm not
African
mistaken.
startups.
Yeah, African startups raised about $2 billion, and then you go from, let's say you're doing 2 billion, and then you're doing like 4 billion next year. That's 2x increase. It's huge, right? Normally, without that boost that COVID gave, it would not happen. So if you remove COVID as a major factor, what's left? Nothing really should have would like we don't have any other factor that
Oh,
would
yeah.
have driven that much growth.
Yeah.
So basically, what's happening now is sort
So
of
in
a reduction.
2023 now, what was the total?
2023, according to Briter Bridges, was about 5 billion. But what we now saw was like a correction. So investors are no longer just pumping money in.
Mhm.
In 2020, 2021, you could see someone who, like, you wanted to raise money, and in a few days you're closing your round, right? That was very common.
Yeah.
Or investors were doing deals without due diligence. It was very common.
Yeah.
But with less money in their hands,
They
they
do
are no
more
longer
scrutiny,
doing.
they do
Yeah,
due
there's
diligence.
exactly. So
They
all of
want to
those
make sure
things.
that you have a
Yeah. So
working
while it was bad,
product.
Brighter Bridges is saying yes, it was bad, but it's not as bad as we make it out to be.
And
So
also, analysts in the global tech space are also optimistic that 2024 would not be as bad as 2023.
I mean, it's debatable. There is a
For some
possibility
countries,
that it would continue. I can't remember what the growth expected for Africa is, but we are not going to like return to the COVID years
Usual.
immediately. So things would continue at this rate, maybe for the next few months. Hopefully, before the end of the year, it's correct. But we can't
doubt it.
really see.
You can't
Doubt
see
it.
it that okay. We are
No, like
hoping. We are we
there
are,
would
we are
be
hoping
improvements, slight improvements.
for the best.
To listen to the full episode of this podcast, go to podcast.techpoint.africa or click the link in bio or just click the link shown on your screen right now. You can find the full episode on Google Podcast, Apple Podcast, Spotify, iHeartRadio, or anywhere else you get your podcast.